example of everything that we've learned so far. We're going to use pound Japanese yen, and we're going to start on the weekly chart. What we can see when we look at the weekly chart is price created a high and it created a low. It broke that high impulsively and is now forming a potential higher low. So what we can gain from that is that price is moving to the upside. We can see that price impulsively broke this structure. If we track back, we can actually see a down move candle before we broke that structure, and we can consider this as an order block. Now, of course, because price didn't actually break structure or can carry on with the momentum in the next candle, we can refine that candle to this candle right here. Now, we wouldn't be trading a weekly order block as we would have to have a large stop loss, but it gives us a general idea that price broke structure, it originated from an overall order block, and we're starting to see that push away moving to the upside. So looking for price to retest weekly highs is highly likely. Now let's take a look at the daily chart and see what we can see. Now that we're on the daily chart, we can see that this is the weekly impulsive leg that we were just looking at. We can see that price then started to make a series of lower lows and lower highs, and has now began to break structure to the upside, forming higher highs and higher lows. So when we're looking at the daily trend, the pullback that we've seen on the weekly right here on the daily was making lower lows and lower highs, and then once we started to see a shift and price starting to make higher highs and higher lows. So let's mark in the current highs and lows on the daily to get a better idea. So now that we have the daily highs and lows on our charts, we can also take things one step further. We can see that price broke to the upside with momentum. If we track back, we can see this down move candle that originated the move that broke structure. So we can see that we have a daily order block as well in and around this particular price. Now if we drop down to the 4-hour chart, we can see that price was in an uptrend, and then we broke this low, creating a lower low, and our high in this case would be these 2 points. So on the 4-hour chart, we're still in a downtrend. We can see on the daily chart that price is pulling back, and we'd be expecting a higher low to be formed that would then push to the upside, which would then translate to the weekly chart testing the highs of the weekly. So we can see how all these time frames are slowly starting to come into unison together. And we can also see that this candle is very large in momentum to the upside. So let's just mark out our 4-hour high and our 4-hour low just to get an idea of the range that price is trading in currently. Now that we have our 4-hour high and low mapped on, let's now navigate to the 1 hour. And on the 1-hour chart, what we're going to be identifying is a break to the upside, creating bullish market structure, which would be syncing with the daily and weekly idea of this trade, as well as identifying any points of interest that we can use to look for potential buy positions to ride the trend to the upside. So what we can see on the hourly chart is similarly to the 4-hour chart, we were making lower lows and lower highs, and then we can see that price then broke to the upside quite impulsively, violating structure right here. And if we look just down here, we can see that we actually have a bullish order block right in this area because price impulsively broke the prior high and is now switching to bullish market structure. So let's map on that order block as our point of interest. So we can see that price broke structure here, switched bullish, which would be the first step for waiting for the 4-hour chart to begin to turn bullish as well. So what we're going to be doing now is we're going to be waiting for price to tap into this 1-hour order block, which we're using as a point of interest for entry. We're also going to take it one step further, and we're going to refine it on the 15-minute chart. So what we can see is price was putting in lower lows and lower highs, and effectively we created a high, we've now broken it, and more importantly we've broken this high, which aligns with the overall hourly high. We can see that even on a 15-minute chart that the trend has changed to bullish. Now if we also look, we can see that this impulsive leg to the upside that broke structure has a point of interest or bullish order block that is formed, and again that broke structure and created imbalance on the way up. So we know that price is more than likely bound to push to this area. One, because we have our 1-hour point of interest, but we've also been able to refine it to a 15-minute point of interest. And as we can see from the 15-minute chart, we've effectively been able to take our hourly 18 pip point of interest and refine it down to a 15 minutes, roughly 9 pip point of interest, which is an overall increase in the risk to reward of this potential trade. So what we can do is we can just play price forward and wait for price to come close and tap into our order block. Now there's two things we can do in this situation as we are looking to enter in this particular value area. Now the first thing we could have done is we could have placed a buy limit order on the 1 hour block with a stop just below, and then a target of the 4 hour high, the daily high, and ultimately the weekly high, which is what this trade is based on, which would allow us an overall 22.7 hour trade. Now if we take that same trade and refine it down to the 15-minute, placing our buy limit order just above the 15-minute order block and stop loss just below the 15-minute order block, it changes the overall potential of this trade to 50.91. So two options there, but there is a third option that we can consider, which is actually utilizing the 5-minute chart, which we're going to do in this case. So what we can see on the 5-minute quite clearly from the 15-minute and 1 hour point of structure, we were bullish and now we're starting to trend bearish as we've broken structure, and now we're creating lower lows and a lower high, more than likely, but again, we're expecting price to tap into this area. So let's just move price forward and get price to tap into this particular area and see what happens next. We can see that price is now tapping into the 1 hour order block. So if your entry was right here, you would have been tagged into your trade and then immediately moved into drawdown. Again, drawdown is not an issue. It's not a big deal, but just something to point out. And then we can see is we've now tapped into the 15-minute order block. So if we had our position there, we would have been tapped in and effectively run into profits. Now, if we look at the 5-minute market structure a little bit more closely as we're tapping into the 1 hour and 15-minute order block, we can see that market structure has created a low, has created effectively a double bottom at this point. This price didn't actually close below this low, and ultimately we're still in a bear trend. Now if we just progress price just a little bit more, we can see that now price is breaking the high. We have a break of structure, now switched to bullish. Now what we want to do is we want to identify a 5-minute order block to look for an entry. And effectively what this is doing is we've now been able to turn a 1 hour and 15-minute point of interest. We've seen price tap into these areas, and then we're looking to have one last extra bit of confirmation that would ultimately provide us with a tighter risk to reward as well. So what we can see is price moved to the upside. We broke this bit of structure. Now if we look for the down move candle that broke structure, if we use this one for example, we can see that the next candle spiked to the downside, didn't really do too much, so we could use that candle. But then what we can see is this candle, again, no real momentum was made, so we can actually use this candle as our true order block, as price then moved quite momentously to the upside, creating that break of structure. So we'll draw on that point of interest now. So now we have a 5-minute order block that we'd be looking to enter this trade on. If we just navigate back up to the weekly chart, again, just to summarize everything, we can see that the weekly chart is in an uptrend, and we've reacted off of a weekly order block. So we know from a liquidity standpoint, orders are being poised to move to the upside. And when we look at the daily chart, we can again see the weekly impulsive leg that we were looking at. You can see that price then pulled back, creating that higher low on the weekly chart. Price on the daily is creating higher highs and higher lows. We're expecting a higher low to form in and around this area and continue to the upside, targeting the overall weekly highs based on the momentum. We can identify a bullish order block on the daily as we broke structure here, which is why we would be expecting a higher low to form somewhere in and around this price level. Again, on the 4 hour, we were bearish, which was in line with the higher low forming on the daily chart. On the 1 hour chart, we've noticed a break of structure, switching the trend to bullish, and a order block that we were using as a point of interest to look for buy positions. When we navigated down to the 15-minute, we also seen that break of structure and a switch to a bullish trend, and was able to identify a more refined 15-minute order block. And then finally, taking it one step further, we've been able to identify after price tapped into the 1 hour and 15-minute order block, a break of structure, switching to bullish, and able to identify a 5-minute order block that we'd be using to look to enter this trade. So what we can see here is we have a buy limit placed just above the 5-minute order block with a stop just below. And if we look at the sizing, we can see that this order block is about 5 pips compared to the 9 or 18 on the hourly chart. Now, if we're looking at the overall risk to reward, if targeting the high, it would be 81.78 risk to reward. So a fantastic trade. Ideally, when looking at this particular trade, you would be looking to target initially the highs of the hourly chart, the 4-hour chart, the daily, and if price begins to run from the daily, you know you have framed out a great trade that is trading in the overall higher time frame momentum, the weekly, and we would then look to target the weekly highs. So now that we have all this framed up, we have our entry set, let's just play price forward and see what happens. You can see that price has now tapped into our 5-minute order block, tagging us into the trade, has a retest, and then continues to move to the upside. Now what we can see, if I slow this down, is price is consolidating for the most part. If we move up to the 15-minute chart, we can see that we've broken 15-minute structure. So from a management standpoint, we can trail our stop loss to break even or lock in profits just underneath this wick right here. Since we're trading an overall higher time frame objective, being the weekly high, we'll be managing this trade somewhat more conservatively and less aggressively. But again, if you're targeting, say, the 4-hour high or the daily high, you would want to be a little bit more aggressive. So let's just switch to the hour chart and watch this trade play out. I'm going to be managing this trade using 1-hour bits of structure. We can see price hasn't actually broken the 1-hour bit of structure here. We just tapped into it. So we'll see that price has now created a high. We're going to wait for this high to break before we manage underneath a low. And we can see that price just barely kept us in the trade. And we can also now see that price has broken this high, so we can manage our trade. Effectively, we wouldn't need to since the lows are pretty similar. So we're going to wait for this high to break before we do anything, which will also be in line with the 4-hour high being broken, which has now happened as I was talking. So we can manage our trade just below this low. We can see that we've created a high now on the hourly chart. To make this a little bit cleaner looking, I'll move my position down here so we can actually look at the price action. So what we can see on the hourly chart as price is moving, we're creating higher highs and higher lows. We've created a high here, so we're just waiting for this high to be broken and closed above before we manage underneath potentially this point here. And you can see that if we were to recognize this wick here as our break of structure, we would have managed under this particular low, which is why price ultimately seeked the liquidity here before pushing to the upside, which is why waiting for breaks with candles is much more effective when you're thinking of it in a liquidity standpoint. Let's just keep price going. So we can see that now we've broken the daily high. You can see that trade is running very nicely, breaking the daily high. We're now creating a higher high. So we would be expecting some sort of pullback before the trade continues, but doesn't necessarily have to. We could run and then do something like that. If we look on the 4-hour, we can clearly see that we have now broken 4-hour structure. And since we broke these highs, we can actually manage our position just below the low of this wick here and lock in profits. Let's just move this in a bit. You can see we have about 14.35% locked if we were risking 1% on this particular setup. So we'll just play price forward again. We've created a high with this wick, and we'll just wait for price to clearly break that high before we choose any bit of management. So what we can see is we've now broken this high, and we can now trail just below this low right here. See now 27.71R locked in on this trade with price impulsively moving to the upside still. And it just shows the power of understanding the higher time frame momentum and being able to frame up trades using order blocks and backing into the overall institutional order flow that is pushing price in these directions. So again, we can see that we've created a high. We'd be waiting for this high to break before we manage. And we can see that price is starting to create lower lows and lower highs. So from this perspective, if we look up to a higher time frame, we can see on the 4-hour that we are creating a pullback before we potentially break the high again. If we go to the daily chart, we can also see that we are creating a higher low potentially before we move to the upside. So looking at this bit of price action just on its own may suggest that this is the sell-off. But if we start to look at the higher time frames, we can begin to put together that this is more of a pullback rather than a reversal. So let's just carry on and see what happens. And when we see this large move to the downside, this can be concerning. We can see we've maintained the low. So what we can do in this case, because price has been pulling back for roughly 4 or 5 days, you have 27% locked in on this trade, but price is currently running at about 53%. This 20% differential here is quite the variance to be holding as risk. What we can do is ultimately trail just below the low here, with the understanding that if price then begins to break down even further, the likelihood of it moving up in the short term are reduced. So what we'll do is we'll just manage just below the low here, locking in more profit. So it will be 43.55R in this particular case. And what we can see before I play again is we've created a low, we've created another low that's higher than this low. So we're starting to put in higher lows, and we'll see if we start to put in some sort of higher highs, which would then potentially show that we are starting to pull back. And if we look on the 4-hour chart, we can see we created this overall liquidity wick that purged to the downside, basically filling in the inefficiency that was in this overall move to the upside. You can see price rapidly moved to the upside very quickly and effectively left these little gaps of imbalance, but this one more specifically. So from a logical standpoint on how order flow works, price needs to go back into these areas and provide the sell opportunities, positions, and liquidity necessary for price to then continue, which is why we're seeing a push back into these regions before we start to potentially continue to the upside. And we can also see the imbalance pretty clearly on the hourly chart here with all of these various sections and price tapping into them. So we can see now we're starting to move back to the upside, but we still haven't actually broken the 1-hour high, key high that we're following. So we're just still consolidating. And what we can see is price retests the high and sells off one more time. And at this point, what you can gain from this is that there is a surge of liquidity at this point where, because we've been consolidating for so long, roughly 5 days, a lot of traders are going to be expecting that price is starting to ascend. We have resistance, basically many reasons to call a top, which traders love to do, call tops and bottoms. We want to trade with the trend. We want to trade with the order flow that is occurring. So if we're looking at this, we can see that there was a sell-off, induced more sells. Some people may think that the bear flag is forming to continue to push down, basically inducing many people to look for sells in this case because of conventional chart patterns. And if we just keep playing price forward, we can see that anyone who was selling from here and scaling in here would be very happy with how the trade's planning out. And then we can see, if we look on the hourly chart here, you can see we have this large move that breaks structure, and within it we have an order block that we can take a look at. We had imbalance, the imbalance got tested, price moved to the upside. You can see it was just barely tapped into it. We've tapped into the order block one more time, and we can see what happens next. We'll see if this order block holds. Speed that up a little bit. And what we can see is we've now officially broken this high, so we can actually look to manage our trade. We can use a couple different points. If we want to use a prominent low, we can see that price made a clear low before it made a high, so we can trail under here, or because we're coming close to our target and we want to be a little bit tighter given how much this has consolidated, we can see that price move down and then move back to the upside. So we're going to use that point as a trail location. We'll just lock in 61.11R on this, and we'll see if we can run to hit targets or if we get stopped out of the trade. And we can see that the target of this trade, being the weekly high, has been hit at 81.78R. And this trade took roughly 17 days to accomplish overall, which is a fair amount of time, but also being able to capture 81R fairly stress-free is pretty incredible. And if we just look at the order block identified on the hourly chart, if I just get rid of this for a moment, we can also see a potential scale in that we could have also utilized using the same logic. If I zoom in just a little bit here, we can see that price broke structure on this point, and we can see that we created a 15-minute block within right around here. You can use this candle right here just because this bear candle didn't produce anything. It was only until this candle that created an actual move. And we can see that price tested into it really quick before it actually broke structure. And then that's when it actually ultimately broke structure here, here, and here. So lots of structure breaks. So if we just draw this out a little bit further, we can see that price taps into this. And if we go down to the 5-minute chart, we can take a look and see what we see when price taps into it. And we can see that in this case, we didn't actually get a true break of structure, but we did get an impulsive move with a little bit of an order block within that order block. So a valid buy opportunity could have presented itself. But if we look and continue tracking price, we can see that we break structure and retest structure here. And if we look at the move that originated that move, we can see that we have an order block right in that area and price tests it. If we move forward a little bit more as well, we can see we broke structure, tested the highs. The order block here would be about, in this case right here, it did spike just below it, but ultimately it worked out. But this was just a quick example of combining everything that we've learned so far using market structure from the top-down approach, identifying the overall trend of the market, dropping down, understanding the waves that have been happening within the market, identifying pullback stages as well as impulse stages, and then using the 1-hour chart to identify points of interest, refining using the 15-minute time frame as well as the 5-minute time frame for that ultimate precision entry that we would be looking for, that overall created a high risk to reward, virtually stress-free trade, especially if we were to be managing it on the 1-hour chart.